Hey everyone, Chris Johnson with Monday Morning here with your 3 stocks to watch for Tuesday, May 28th, 2024. Not a big surprise. You're going to be running through NVIDIA here in just a second, ARM Holdings, and Tesla. I also want to go through a couple little points on the market. I'm going to be writing about it on mondaymorning.com tomorrow. A warning sign that all of the boats in the harbor aren't moving higher. You'll know exactly what I'm talking about in just a second. Let's jump into those 3 stocks first. I'm going to talk about NVIDIA. Shares trading up more than 7% today as everybody is piling into this stock. I did a video on NVIDIA just over a week ago talking about how it was the most dangerous stock on Wall Street or in the world for that matter. And shares are still in that position. We see that they've rallied now 25% after that earnings report last week. And the reason that they're most dangerous, or they are the most dangerous, is that everybody loves this stock. And we're seeing right now that everybody's piling in the last 3 days, heavy volume going in. We're trading above that top Bollinger Band. If you don't know what a Bollinger Band is, give me 30 seconds. I'll explain it. So Bollinger Band is nothing more than a gauge of volatility for an individual stock. You find that there's a pattern stocks follow in terms of their volatility. More volatile stocks will have wider Bollinger Bands. In this case, any stock, it adjusts to any stock. Any stock, when it breaks above its top Bollinger Band, it tells you that price move, either higher or lower, is unusual for the stock. In the last 3 days, we've seen unusual price activity from NVIDIA. Doesn't mean the rally is over. I think you're going to see more upside. It means it needs a little bit of a break. In other words, Wall Street's gotten a little too excited. And you can see that run from just under $1,000, $950, all the way up to just almost $1,200 we're seeing right now. Give it a rest. If you've been sitting there waiting for a chance to buy NVIDIA, the best opportunity was going to be after earnings. If they'd come in and just misstepped a little bit, we would have seen the stock immediately pull down to that 900 level and then 800 after that. But that not being the case, your next opportunity is probably going to be somewhere around that $1,000 mark. Here's how it usually plays out. You're going to see a little bit of selling after this run-up, right? People taking profits. Taking profits is never a bad thing to do, and you're going to find people doing it with NVIDIA. But wait until the market blinks, gets back inside of that Bollinger Band line, and pulls back to that round number support. 2 things have been driving NVIDIA shares higher. Number one, you've got more than 20 analysts that have come out and upgraded their price target right after their earnings call. That is driving a herd of buyers into the stock. The second thing is that $1,000 level. I always talk about round numbers, and 1,000 is about as round as it gets in the stock trading world. When you move above a round number like this, you tend to have that FOMO feeling kick in. Investors looking at it saying, oh my gosh, it's going to go to 2,000 next. It's not going to 2,000 without a nice pullback here. 1,000 for that same reason is going to be the level you look at in terms of a buy the pullback or buy the dip opportunity. I was hoping to grab some extra shares at 800. I'm going to have to wait until there's a deeper pullback in the market. So there you go. NVIDIA right now dropping higher because of all those analysts upgrading their price. 14% upgrade to the target prices on behalf of the analyst in 1 day. That's something I've never seen on Wall Street, and I've been watching Wall Street and trading for more than 30 years now. Now, number 2 stock for the day also has a tie with NVIDIA, and that is ARM Holdings. If you remember the story about ARM Holdings here over the last couple of months, actually the last month or so, ASML came out. You can see that this big drop here in pricing. ASML, who's in the same business as ARM Holdings, came out and they had lighter than expected booking. You also saw some selling in the semiconductor sector right around mid-April or so. When you look at earnings, this is where ARM actually gave their earnings announcement. Better than expected numbers, not only on the earnings per share, but also on revenue, which was much better than what was expected from Wall Street. And the outlook was guided higher by ARM Holdings. And we've seen the stock start to crawl back out of that hole after that earnings announcement that came right in here, right? Today's move, and the stock traded up nicely today. It was up almost 9% for the day. Today's move is driven by technicals and a little bit of psychology here. First of all, let me break down the technicals for you. When you look at the 50-day moving average, and I'll bring this in a little closer so you can see the actual performance here over the last 3 months. When we look at that green line, the 50-day moving average, we broke above that. What's so important about the 50-day, CJ? The 50-day moving average embodies the saying, the trend is your friend. It's that simple. This is one of those trend lines, along with the 200-day moving average, that everyone on Wall Street is watching. The technical traders, the algorithms, even the slower moving Wall Street analysts are looking at the 50 and the 200-day moving average. The trend is your friend. Well, today, ARM Holdings broke above after 10 days of battling out with that 50-day moving average. It finally broke above the 50-day moving average. It brings a little bit of relief for the technical traders out there, and you see volume increasing, giving you that 9% move. At the same time, remember, I just mentioned that Bollinger Band. You broke above the Bollinger Band, the top Bollinger Band. In this case, those Bollinger Bands are pretty tight for ARM Holdings right now, which means the stock is going to have a volatility surge higher. Now, when we look at what's going to happen over the next couple of weeks, first of all, you've got everybody plugging into NVIDIA and other semiconductor companies. AI earnings, for the most part, are off the table, or at least the calendar's getting a little bit lighter. So companies are going to be trading much more on technicals and headlines, such as what we've seen with NVIDIA. So when I'm looking at ARM Holdings right now, the 20-day moving average, which is right here, that red line, is leading higher. That tells me the shorter-term traders are on board right now with this move. The break above the 50-day starts to get more intermediate traders and some investors into the mix. And as we see the stock go up towards that 140 level, and I'll back this out to look at the monthly, remember, this is a new stock. This was created after NVIDIA tried to purchase or was going to purchase a company, and then back in 2022 said, we can't do this, or really regulators said you can't do this from an antitrust perspective. So a relatively new company, all of a sudden we're going to be playing around with those new highs around $150. This is the move from a long-term perspective that a lot of investors have been looking for from ARM Holdings. We've seen a lot of IPOs that have kind of burnt and made investors feel sorry for buying them. Not the case right now when you look at ARM Holdings, and expect those headlines to remain positive for the company. Right now, I look at taking out this $125 level on ARM as a lead up to $150 for the stock. And from there, you'll hear people start to talk about the new highs, the all-time highs, and something will start to happen with the Wall Street analysts. They're going to pick up on those new highs and start to get into the stock. This is not a discovery stock, which is what I call SMCI and a few others, but it's early in the stages for the Wall Street analysts, as we'll start to see more buy recommendations drive prices higher. Again, look back at that NVIDIA situation and how it's the world's most dangerous stock. That's simply because everybody owns it. Not the case with ARM Holdings, so we can see room to move higher. Third stock of the day, and this is one that we've talked about quite a bit, Tesla. It's not going to go away in terms of the headlines over the next few weeks, because we're going to see, obviously, shareholders vote on Elon Musk's pay package. That's been the news headlines for the last couple of weeks, along with pressure from China. There was an interesting article in Barron's over the weekend that talked about that potential pressure from China and how the tariffs that are going into place on Chinese-made or Chinese manufactured vehicles coming to the United States is giving GM and Ford and Tesla a little bit of breathing room here to kind of get the market a little firmed up from our perspective. Now, watch GM and Ford here over the next, call it 6 months to a year, as I think you're going to see a little more movement towards the hybrids versus the EVs. Nonetheless, you're not going to see that from Tesla. A different chart here, and we're talking Bollinger Bands on all three charts today. In the case of Tesla, this is a chart that should be worrying the intermediate and the long-term investors. We've got those headlines that'll be coming up, and obviously that has to do with how much they're going to pay, if they're going to pay Elon Musk. Over the weekend, we saw a large proxy group actually recommend that shareholders vote against that pay package. This is going to put more grist in the mill here over the next few weeks on what's going to happen with Elon Musk. A lot of speculation here. Even he's given a couple of rumors that, hey, maybe he should be working with someone else that's going to pay him what he's valued. That causes those long-term investors to kind of lose a little bit of hope. But the price chart right now, when I look at Tesla, is giving the intermediate-term investors and even the long-term investors something to worry about. Specifically, let's look at what's happened here over the last month, 2 months or so. We saw a large decline into that earnings announcement. Right here is where you saw Tesla announce their earnings for last quarter. It was not as good as anybody expected. It wasn't a kitchen sink quarter, but what happened here to make a 40% rally? And that's what you saw when we went from 140 almost up to $200 on Tesla. What we saw was investors giving a little bit of a hope trade because Elon Musk and management came out and said, hey, we might have some of those cheaper model Teslas available for sale the end of 2024 and 2025. Now, here's where the picture broadens out to look at the market just a little bit more. We've actually seen consumers backing off. If you watch the consumer discretionary companies, if you watch the retailers that are coming out over the next week or so, we're seeing a recurring theme, and that is that you and I are starting to tighten up our purse strings. We're spending less, and it's because inflation has just been hitting us very hard for the last couple of years. What you're looking at right now is the XLY. This is the consumer discretionary sector. Gives you a good broad sense of those companies out there, whether they're home builders, whether they're airlines. Think about the things that are discretionary that we spend money on, and you can see this downward trend that we've seen in the broad basket of those discretionary companies. Tesla is in this sector, and I'd argue that Tesla is one of the larger companies when it comes to something being discretionary. It's a little expensive to go from an internal combustion engine over to an EV, whether it's putting the charging in system into my garage here or even worrying about where I'm going to charge it. It's a little bit of a leap of faith right now. And as prices have been very high, consumers are less willing to take that leap of faith. Now, let's go back down to that micro level here and look at Tesla shares and why it concerns me over the next, call it 2 to 3 weeks, maybe even a little bit longer. Here's your daily view of Tesla. And to back it out and look at a 6-month chart here so you can see a little more perspective. This 50-day moving average that I've already mentioned before, that green line, that's the trend. The trend has not been friendly for Tesla at all. When we look at the 200-day moving average, that's that blue line. Both of those are the most widely watched technicals, both trending lower. It puts pressure on Tesla to really outperform, to do something that is really going to get people back on board again from a technical perspective. It's right now, this is saying that the charts are failing Tesla or Tesla's failing traders, right? So here's where you get into something interesting. I'm going to bring the chart back down to a 3-month so you can really see the detail here over what I'm concerned about. Those Bollinger Bands I mentioned earlier, when they tend to get a little closer, they create what I call a volatility squeeze situation. And what that means is that you've seen prices consolidate over a period of time. And when you have a stock that gets too quiet, think of it as the quiet before the storm, right? Right now, we've got a little tightening of those Bollinger Bands, similar to what we saw right here on April 15th. And when we broke down below that technical, that 20-day moving average in that case, the stock started what I refer to as a volatility storm. It took it down about 15% in 8 days. We're looking at a very similar situation right now. There's your 50-day, which is that critical trend line that investors and traders watch. And then you've got just below that at $168, that bottom Bollinger Band. A break below that bottom Bollinger Band is most likely going to initiate another one of those volatility surges, just like we saw right here in April, knocks the stock back down to $140. Then we'll have headlines coming out from that shareholder vote. What I'm trying to say is right now, if you're looking to buy Tesla shares, it's a good time to hold off and let the chart play out a little bit. 140 breaks, and you're looking at a stock that could trade down to $100. And whenever I say that, people say, hey, CJ, no way Tesla goes down to $100. Well, let's look at the last couple of years and look right in here. 2023, January, it traded at $100. That's one of those levels that I look at right now and say the round numbers, zeros, just like $1,000 with NVIDIA, starts to kick in a little bit more buying, a little more of that long-term view on Tesla that's going to be out there a year from now, 2 years from now at higher prices. You're going to find a lot of people jumping into the stock around that $100 level. Keep in mind, we've also got a couple quarters worth of earnings that you have to get over with Tesla in order to make everybody feel good about being long-term bulls. Just saying from the dollar cost average perspective, and I always say it's hard to short Elon Musk. It's really hard to bet against him over the long run. At $100, you're going to find a lot of people just saying, I'm in it for the long run with Elon Musk and Tesla. I'm going to go ahead and buy. My guess is a 2 to 5 year range, you're going to find that that bet is going to pay off well. Over the short term, it's going to be a bumpy ride. We need a kitchen sink style quarter from Tesla in order to get things moving to the upside over the long term. Let's take a second. I told you at the beginning I wanted to talk a little bit about the market. I'm going to write about this tomorrow morning on moneymorning.com, so make sure you check it out. But a little bit of a situation when we look at the technicals and what is driving the market higher right now. What you're looking at is an interesting chart. We've heard that term, market breadth. Everybody knows the term market breadth, but can you quantify it? Is it easy to look at a line and say, well, market breadth is good or bad? It's exactly what you're looking at right here. This is the percent of companies that trade above their 50-day moving average, that critical line that I just talked about. These are the percentage of companies in the S&P 500 that are trading above. And right here, you can see in April, we started to see an upswing in the S&P 500. And right here is that October rally that launched stocks higher into the year end. When we reach these levels, that's where you've got about 10% of the companies in the S&P 500 above their respective 50 days. Right in here, when you're in that 40 to 50 to 60% range, that's where the market can tend to have these transitions, a rally that ends up being faded. Note that we've seen this run up to about 65%, and right now the number of companies that are trading above their 50-day moving average is on the decline. That tells you that market breadth is getting weaker. You might have heard the term, 7 stocks, the Magnificent Seven, are driving the stock higher, or it's a narrow rally. This is exactly what everyone's referring to when they say that, and it's very hard for the market to continue moving higher when you see these negative trends. Now, that's the S&P 500. Let's look at the NASDAQ. NASDAQ has been the stronger performer. In the last couple of days, it's really outperformed as we've seen the chip makers moving higher after NVIDIA. Well, when we start to look at what's happening, that trend in the NASDAQ is starting to roll over here. So fewer boats in the harbor are higher. Kind of tells you that the tide is starting to fall out from below. Expect this to put some pressure on stocks over the next couple of days, next couple of weeks. Not only are we getting some technical pressure, but you're going to get a little anxiety in the market as we head into the end of the week. On Friday, we see the PCE come out. That is the Fed's favorite inflation indicator. We saw mixed reports or mixed numbers from the CPI and PPI just a couple of weeks ago. PCE is going to be where it's at in terms of what we expect from the Fed. And right now, a lot of people backing off of the situation that they expect to see the Fed drop rates over the next couple of meetings, really getting towards the end of 2024. Investors are clamoring for that investment rate drop. That is the thing that they need to get on board with stocks. When you look at the small cap stock indexes, the Russell 2000, it's showing a little bit of wear right now that we're starting to come to grips with the fact that the Fed's not going to drop rates as soon as we thought. That PCE report on Friday is going to add a little bit of anxiety to the market. What I'm saying is, outside of the tech sector, and maybe that's a little more dangerous, keep an eye on where the market goes over the next couple of weeks as we head into June. June seasonally is one of those months that typically throws a little bit of a curveball at the market. All right, let's summarize everything I've hit here for you today. Looking at NVIDIA right now, Wall Street analysts and that $1,000 price level have just added fuel to the tank. We will see a pullback at some point. Last quarter, when we saw the earnings knock the cover off the ball, the stock took off about 24% or so. Then we saw a quick 13, 12% pullback, and then it took off again as everybody that was waiting to buy the dip jumped into the stock. It's going to be the same way this time around. Look for $1,000 to add some support to the stock. I'd love to see something deeper on it, but the market's really going to have to come back in. When we look at ARM Holdings right now, breaking above 125, you got to see a $140 print, which is going to lead to $150. Analysts are going to start picking up on this stock. It's still very, very new in terms of its IPOing recently and heading up to these new prices. So people are going to want to get on board with this new high stock as it hits it. And then finally, Tesla. Looking at it right now, bouncing across that $170 level. Got to expect that the sellers are going to start to step in heavy on it. If we break down below that, 168, a lot of anxiety with those headlines that are going to be coming from the shareholder vote. And what's going to happen with Elon Musk? We really needed that kitchen sink quarter last quarter to just get everything out of the way. This is just too much drama for the market to continue supporting. I'm going to be writing about the drop in breadth and how it could mean a little bit of softness for the market in June. In tomorrow's episode of The Morning Buzz, you can find that on moneymorning.com. Make sure you like and subscribe the video for more 3 stocks to watch and other stocks. I'm Chris Johnson, wishing you the best trading success.